Commercial banks. Well, commercial banks works as an intermediary between savers and investor or borrowers of the economy. Profit making is the main motive of commercial banks. Hence, commercial banks are also known as profit seeking financial institutions. Accepting deposits and giving advances and loans are the basic primary functions of commercial banks. Those people who want to save their money, they deposit their money with the bank, and people who want to use that money for their business purposes request the bank for advances or loans, and they get loans from the bank. Now understand, the people who saves the money, banks give them a certain specific rate of interest, and people who wants to borrow that money, get a loan for that money, the bank charges them higher rate of interest. So difference between those two rate of interest is basically profit of the bank. Here, the depositor has the advantage that his money is being saved and he gets a some amount of interest on it. Whereas bank mobilizes these savings into different sectors of economy by way of giving advances and loans. Commercial banks are basically categorized into two areas: scheduled commercial bank and non-scheduled commercial bank. Well, scheduled commercial banks are the banks which are listed under the second schedule of RBI Act 1934. In order to list a bank into second schedule of RBI Act 1934, scheduled bank has to follow various guidelines. Guidelines like a scheduled bank has to maintain a minimum of 5 lakh rupees of paid up capital. Every time the scheduled bank has to assure RBI that the loans and advances given by the bank does not harm the interest of depositors, and similarly other restrictions provided by RBI in that act. The banks which are not listed under the second schedule of RBI Act 1934 are non-scheduled commercial banks. The commercial banks, on the basis of ownership, are categorized into various areas. They are called as public sector banks, private sector banks, regional rural banks, foreign banks. Various functions bank provides, like acceptance of deposit, giving up of advances and loans. Commercial banks also work for ancillary functions like demat facilities, bank to bank transfers, and similar other facilities. Commercial bank also helps in credit creations. So, in nutshell summary, well, commercial banks acts as a intermediaries between the savers and investor or borrowers. Profit seeking is their main motive. Hence, commercial banks are also called as profit seeking financial institutions. The basic functions of commercial banks are accepting deposits and granting advances or loans. And the difference between the rate of interest on both of them is basically profit of these commercial banks. The whole purpose of commercial banks comes into fruitfulness because savers gets the facility to save their money and get some amount of interest on it, and banks get the advantage of mobilizing those savings into the different sectors of economy by way of loans and advances to those people who are requiring it. Commercial banks are further categorized as scheduled commercial banks and non-scheduled commercial banks. The banks which are listed under second schedule of RBI Act 1934 are known as scheduled commercial banks. These banks has to follow RBI guidelines. Guidelines like every scheduled bank has to maintain a minimum of 5 lakh rupees of paid up capital. They need to ensure every time the interest of the depositor is protected, and similar other guidelines laid by RBI. Commercial banks are further categorized on the basis of ownership in the form of public sector banks, private sector banks, regional rural bank, and foreign banks. There are a lot of functions commercial banks perform, like acceptance of deposits, granting advances or loans. It also performs various ancillary functions like demat facility, bank to bank transfers, and allied facilities. and it also helps in credit creation of the economy.